All right, welcome everybody. My name is Fausto from Cyber Trading University, and welcome to the Cyber Trading podcast and webinar. And we are having a new guest here for the first time here. I'm really excited to talk to him. We have Simon Klein here, and we're going to be talking a little bit about his TradeSmart and forex, and a little bit about trading and what's changed and everything else that's going on. But Simon, welcome to the show. How's everything going?
Hi, thanks for having me, Fausto. It's great to be here.
You're more than welcome. You're more than welcome. So what's been going on new? What have you been doing? By the way, have you seen what happened this morning? Did you do anything this morning, by the way, in trading?
No, I was looking. The markets are pretty. The ones I'm looking at are pretty slow.
Yeah, well, tell me, what markets do you look at more or less? Like we have a lot of people here that are all over the world, and some people are forex traders, some people are stock traders, and option traders.
So I primarily nowadays look at the forex markets, the majors, and also the futures markets.
And how is that? And a lot of people get a little nervous with the forex market a little bit more. Now that crypto came into play and gold's making a nice little run, how is that affecting with the forex market?
I don't think it's really affecting it at all. It's kind of business as usual. All the markets. There's maybe less movement now because we're in the summer doldrums. Like traditionally, July and August, there's the markets are kind of sometimes range bound, or they kind of quiet and then they make a sudden move and then they're quiet again. So you have to be very, very exact in your entries in timing to trade these markets well at the moment in the summer months.
Now, when did you get involved in the forex market? How long has it been? How long have you been doing it for?
I actually started as an equity trader almost 20 years ago now.
20 years.
I actually started in the industry in '96. Straight out of university, I worked at Credit Suisse in both London and New York. And then I took some time out afterwards and left that world, and then came back in as a trader.
Now, let me ask you, because I was very big in the forex market. I had a lot of affiliates like, FXCM. I don't know if you heard of them before and stuff like that.
Yeah.
Like, I remember they kind of changed everything, and I was always told that with the leverage that was in forex. I found that being an equities trader for about 35 years, and what happened that hurt our industry a lot, and it being in the equity business, is they came out with the day trading rule. And, and then people just learned how to adapt. And like, you know what, you're not going to stop me from trading. So, because they had that $25,000 day trading rule then. So what they ended up doing is they said, all right, well, they went to forex. You know what I mean? And I know companies like FXCM did really well. And some other ones, what was the other one out there? There was a few of them that were out there that kind of did the same thing. And, and they really blew up because of it, because you could open up these mini accounts and everything else. So what happened from there until today? Anything has changed, or?
Yeah, regulation came into the market. It was like the Wild West at the beginning. But if you're a good trader, you can make money in any market. And without, it's because the entry requirements to get a trading account are almost nothing at the beginning. And you can get a lot of leverage. It's a double-edged sword. If you know what you're doing, you can do really well with a small account. You can actually grow it. And if you don't know what you're doing, then you'll blow that account out. And that's what happens to the majority of people that don't know what they're doing.
Well, yeah, I know.
So I think the industry's become more regulated. So, the brokers aren't allowed to do what they may have done at the beginning in the same way.
And what were they doing? What was the secret? Because I always tell them always the things they do in the back end. What were they doing that?
Well, in the back end, they've got this A book, B book, so they could be on the other side of your trade. It means there's a conflict of interest. If they're if you take a buy and they're on the other side and they're selling to you, then obviously, the majority of traders lose. So it makes sense, rather than them sending it out to the market, they'll just do it internally and take the other side of your trade.
So they're basically like the casino, the bookie. They're taking the order. They're not even executing the order like a direct access trade. They're just saying, okay, listen, like you just said, we know most of them are going to lose. So if they win, so if the bet is about 80% to 80-20, you know what, 20% they'll lose, but 80% they'll make on the other end. Because I know that forex back also didn't have like a big spread a little bit more too with currency. that they had a good cushion to hold back if they had to cover that trade?
Probably yes. I mean, they usually, instead of charging commissions, they would just increase the spread. But that's in many places now, that's regulated, what they're allowed to do, how wide they're allowed to make the spread.
So how did they recover it? I mean, listen, like what inspired you to get into? Because I want to lead to this question too, but what inspired you to lead the equities market and get into the forex market? Because you know what,
my children.
Ah.
You're asking why? Because I used to start working, like when I traded the US equities. For me, it was 4:30 in the afternoon when the market started. That was 9:30 a.m. Eastern time. So I used to, go off and work on the trading floor. The time I used to be, when we used to work, the end of day was 11 p.m. The time I used to get home, I used to miss my kids. So I decided to, out of really being a trader, I changed markets so that I could trade at a time. And now as they were smaller, I could spend time with them. So I would trade the forex market. That means I trade the open in the morning for me, local time 10 a.m. and the US open at 3 p.m. in the afternoon, and be done, basically.
That makes sense because, I always tell everyone you should try a little bit of everyone's type of markets. And I mean, I think, and from your perspective, I tell everyone 70% of way we trade is exactly the same because a lot of it's psychology, money management, all that. And you really just kind of find what has to fit within your schedule. Like I have, being in equities, I live here in New York. I mean, the way the hours work for me, it's like the first hour of the open, last hour of the close. Some people are West Coast. I mean, I had people that came from Singapore, and Australia. They wanted to trade the stock market, but the times is very, very difficult. So, or working schedule.
Yeah.
So yeah, I mean, you end up finding your niche. So that worked out great. Now, now you've been doing the forex market over 20 years now, you said?
Well, actually, no, I was trading equities probably the first 5-6 years. And then I was on overlap where I traded equities and forex. And now primarily forex futures.
So explain that to me. Like, what's the difference? I mean, how do you go from forex into futures? Because they are basically two different markets. I mean, two different exchanges, I guess, right? Is that way you look at it? Depending on
it depends. I mean, the forex market, you can trade exchange trade if you trade the futures, the forex futures. Or you could trade the spot market. I mean, it's entirely up to you, which is more of an over the counter market.
Now, have you seen any types of changes that are going on other than regulation in the forex market? Because I'm not hearing too much of people trading in the forex. Like you don't hear too much on the financial stations. Because it's like, I don't know, crypto took over a little bit more on it. But have you noticed anything that's going to change or get more people into the forex market?
Nothing particularly. No.
Okay, and what are you seeing that like this? I'm going to Greece this year. Anything I should be paired from the U.S. market to the euro that I should be looking at, or
no, not particularly. No.
All right. Well, regarding about that, what is your, how do you teaching people? What is your style, more or less? Like, why? There's so many people teaching different types of exchanges, different types of market. Like, I had so many people in my industry, they all have styles of way of, like using a certain indicator or using some certain software. Like for me personally, I kind of just focus on following the big block orders. I show how to follow the high frequency trades, the algorithms and all that. What is the niche that you have that makes you different than most forex educators and gurus out there?
So through my kind of education as a trader, I kind of, like in any industry, you want to know what the foundations are. So I believe the foundations of trading, any type of trading, especially if you're reading the markets, if you're a technical trader, is you have to learn how to read the markets. That's number one. There's many different ways to do that, but if you take it down to the foundations, you have to understand how to read price action. So that's what I focused on from a reading the market perspective. And I'm going to share that a bit later on, a bit about my approach, so you can actually see it in action, how it actually works. It's basically a three-pronged approach, very briefly, that looks at the trend using price action alone, the candlesticks, no need for indicators. A naked trader, I don't use indicators pretty much. And based on supply and demand, and based on something I call price direction. So put those three together in multiple time frames, I can understand what's happening in any market at any time.
Yeah. Go ahead. I'm sorry, I cut you off.
So that's basically stage one. So once you know how to read a market, that's the foundation. From there, the next foundational knowledge you need to know is how to take that knowledge and put that into a working trading plan and trading strategy for yourself, so that works for you. Most people start at the strategy before they've got the foundation down. So you need to know how to read a market first, and all the steps that go into developing a strategy that fits your own personality and lifestyle. So that's what I focus on. So it's not a one size fits all. It's learn the foundations and find out what works for you, and then implement that and understand the steps to go through the process and to take you from point A to point B in a consistent way. So that's what I've worked on over the years, is to develop that kind of methodology and system to take a trader from beginner or wherever they happen to be to consistent profits.
So
consistent success.
So how does someone get started in the forex market? I mean, so like if I want to get involved, I know nothing about it, because you hear all these good things and you hear the bad things. I mean, for you to convince somebody to tell people, like I always focus on not the glories. I don't focus on the winners and everything else. I like to focus more on the losers, because if you can control those, I mean, the winners take care of themselves. But everyone, I know that gets in any industry, there's always a big failure rate. What is the basic way of getting started in the beginning?
Well, I don't think it's anything particular about the forex market. I think it's trading in any market. When I first started trading on the equity market, stock market, there was no such thing as we traded a round lot, which was 100 shares. You couldn't trade fractional lots. It was 100 shares. When I started in the forex market, we could trade, full lots was $100,000 if you're trading the euro, for example. You couldn't trade, micro lots. It didn't exist. But now you can. So I would say from a risk perspective, every market has, if you're trading the E-minis or the NASDAQ, then every tick move, every little movement in the market is a certain amount of money. So in the forex market, it can be very small. You can actually trade with almost no real money risk, if you want to put it like that. So you can trade with micro lots, which means that a 1 pip move or 1 tick move in the euro dollar is 10 pennies, 10 cents. So if you look at, if it moves 100 pips or 100 ticks, that's not a very large amount in money terms. So you can actually learn to trade with real money, very small size, and get consistent, which is one of the huge advantages of the forex market for a beginning trader.
Now, why is it like when I go to Europe or whatever, or go to Canada, I'm going to Canada, do speakings all over, like, why is it such a big conversion rate when I try to move my cash over that way versus, trading the forex market? What makes the spread so big on them to do the conversion?
The banks make, or the companies make more money. They can offer whatever they want.
How do I beat that? Is there any way for me to beat that, to get a better rate? Or I got to just always go to those exchange booths? Just thinking out loud.
Well, you can open up a multi-currency account and just move money between your accounts and, get whatever the going rate is. There's different ways to do it. You can have multi-currency accounts. Some of the brokers allow you to have multi-currency accounts, so you can move those and actually draw the money from them in whatever currency that you're holding.
And then what was the spread on that compared to going through an exchange? How much money you save there, just out of curiosity?
I haven't really checked it out, but it would probably be less than what you'd pay in the bank.
Okay. All right. Now, regarding about overtrading the years, any things that really stick out, like memorable moments, of the trading. I mean, like I said, one of the biggest memorable moments I know trading the forex market that kind of changed everything is when it was Swiss franc was like the biggest drop ever. It kind of really put a company like FXCM out of business almost.
Yeah, I remember that.
You remember that? That was like an anomaly, right? I mean, that doesn't really ever happen.
So, talking about memorable, when gold futures went to negative, I'd never seen that in my life. Do you remember that?
Yeah, I remember oil futures went down to negative.
Oh, not gold. It was oil futures. That was
oil futures.
Oil futures went to negative. I never saw that before.
So how could you have bought that? So explain that. It's like when I try to explain to people, like when you look at the futures, like if they'll deliver the product, right? You can get a delivery on it if you don't close out that position. And I'll never forget a story. Tom Sosnoff, a good friend of mine from the founder of Thinkorswim, and he told me, like, we were talking about silver, and because I like gold and silver too, and I know some people here too, and he had a contract on silver, and he wanted to take delivery, and they kept calling him. They're like, we're going to deliver this thing. No, I want it. They deliver it, and they usually, like, he's a trader. I'm like, do you understand how much silver you bought? He's like, yeah, no problem, I'm taking delivery of it. You know what I mean? Like, so he actually had it delivered, and that's another story I'll tell you. It's a little funny story.
So I mean, some of the futures markets are for delivery, like non-precious metals, for example, aluminium. Yeah. So I train traders that over the years that work in the institutions that trade non-precious metals. So when they're doing it, they really want delivery. So they have to organize storage and delivery and everything else like that. That goes with large amounts of non-precious metals. They actually want the physical. The markets are for delivery.
So they just come to the exchange and they say, "Here, come pick it up." Is that what they do?
Well, I don't know what I mean. That's one of the market. The aluminum market is for delivery. Or I guess you roll it into the next contract. That's how the markets work now, don't they? They roll into the next contract.
Yeah, because I remember he told me he took delivery on 100 ounces of silver, and he paid a kid. He paid some kid at work for him to go pick it up at the exchange, and he goes, "I'll never forget." But how heavy is 100 ounces? Would you say of silver? How many pounds is that? It's got to be what, 50, 60, 100 pounds, I don't know, something like that. He ended up pulling the kid getting hurt in his back, and he had to get surgery, some crazy story like that. So he's like, it was a good trade, but it ended up costing me money because I had to pay the kid's medical bills to go pick up the damn thing. So, but anyway, about that memorable moment, like you said with oil, like, did you trade that? I mean, were you able to?
No, I saw it, suddenly tank.
Yeah. I thought it was almost fake. Right. I'm like, I never seen anything like that too. That was
the only time in my whole, I thought I'd seen everything you've probably been trading for many years. After you've been trading for, I think, even over a decade or whatever, you've probably seen most things that can happen in the market. I remember also in the early days when I was working, we had a T1 line in the office, and I got into a trade, and I didn't realize that the internet had gone down, and I was looking at the chart and it's like, okay, I'm getting out of the trade. So I hit my keyboard to get out, put a sell order in, and nothing happened. So I hit it again, nothing happened. Keep hitting it. And they said the internet's out. I'm like, oh dear. So what happened, a few minutes later, the internet came back, and I'm net short on it. It was a long position I was closing, and I was net short a massive position because all the orders went through once everything came back, So that's what the downsides of technology sometimes.
Yeah, that happened to me. Jesus, back in the day, I used to work for a day trading firm. It was called Souls Firms back in the day. I don't know if you ever heard of them, but my God, and back then we had to guarantee 1,000 shares. So, we were in an area where we'll lose internet, and some people here know what I'm talking about. But we had what's called T1s. That was
yes.
You remember the T1 connection. And it would go down, and everybody would be like, I can't get out. And you just freak out because you got a lot of money on the line. And who takes the hit? Not them, you do. So if they're down, that's not their problem. So it was pretty intense. Yeah, I bring up the internet. That was pretty dangerous.
I've been in situations where I've had to, use the phone line, like old phone line, not digital, when power went out and everything's down, and I had to phone the trading floor to get me out of positions.
Good. Well, regarding about all the bad things, just a couple of things about, the positive part about, your life and your career, being around for a long time. Because I always tell everybody, listen, if you've been around this long, you're obviously doing something right. I mean, like you mentioned, like even me, I've been through the worst. You've been through the worst. I've been through the internet bubble. You've been through Hurricane Sandy. And there's like a story, I could talk for hours for each story, what happened those days. I mean, everyone's probably now new here, been through COVID and saw what happened there. But where do you see the overall market going from here? Do you think it's going to, like, you see another, I mean, we have an election year coming around. I mean, I know they had the NATO meeting, and a lot of people are a little concerned. Is it going to be Biden still going to be there? Is it going to be Trump in there? Could that affect a lot of the forex exchanges at all, or it's going to just be whatever it is?
So I basically, I put up the charts way back when I tried trading using a combination of fundamental and technical. That's what we used to do. We used to look at, try to read the news, and we used to get a news feed before even it hit the general public in the office that we worked. We used to get it before everyone else. It still didn't help because sometimes, the market moved in the opposite direction and you think it's going to be good news, and, it didn't do that. The market reacted differently. So what I do now is basically just trade what I see happening in the market, understanding where the levels are, where the market is now, where's it going from, and where's it likely to go to, and how can I manage my risk and get in with the least risk and the highest reward potential. And then it's position sizing and taking the trade and repeating, but knowing ahead of time what your statistics are. So, per strategy or whatever you're trading, that, say, one strategy trading is 50% batting average, that half your trades aren't going to work, but when you get it right, maybe you make 2 times than when you don't. So you'll take every trade, and over time you'll come out on top because you have a positive expectancy. So I think looking at trading not from a one trade perspective, from a at least 20 trade perspective, it gives you a different kind of view of your trading. You shouldn't judge your trading by one trade alone.
Yeah, and I guess you look at it the same way as what I look at it. I mean, listen, if it causes volatility, that's all that matters. You just go with it, and follow the chart. So how do you teach? And I want you to explain to everyone a little bit more of your style. But teaching for a while, how do you teach people to trade the forex market? I mean, what is how do you go?
Well, it's not particularly the forex market; it's any market. So my training geared to any market, any time frame. Anything. I even used it on the property market. Like, once you've got charts of property prices and whatever else of different property funds, you can actually trade property. You can trade anything that has chart. Anything you can chart, you can trade. Once you understand, what's going on.
Yeah, why don't you do that? Why don't you show us a little bit about on your chart and show